we are gonna roll straight into Jason from Daylight. It's going to be another conversation about energy. So it should be a good one.
Yeah. Oh yeah. I like the through line here. We're going to go straight from uranium nuclear energy, and I believe Daylight is working on solar, right? So we're going to talk about the financial layer for decentralized energy. Daylight helping households generate, store, and share power. Jason's ready in the back. Let's bring him up. Without further ado, we're going to go from uranium, tokenized uranium products. Maybe Jason will give us a little bit of the juxtaposition between nuclear.
That's right.
And
That's
solar.
what I think so, man. I mean, I'm bowled up, man. I'm thinking a little 50 bagger of X308 is on my Christmas shopping list here at $4.77 an ounce, all-time highs of 662. If we think Bitcoin's going to $250,000 because they're going to devalue the shit out of the dollar, then we can assume that other commodities that are scarce will also do pretty well. I think I'm going to have to buy that.
Energy.
Jason, are you welcome to the show? Are you a uranium bull or are you an uranium bear?
I'm an energy bull.
Okay.
And so I think we are in a world where we need to build more of everything, and all inputs into that are critically important. So uranium to solar panels, we're bullish.
Yeah. I mean, I was showing our last guest, Arthur, the co-founder of Tezos, this book here. It's Marin Katusa's The Rise of America. And he talks a lot about the different American, basically like he predicted the re-onshoring of a lot of the things that now like this new administration has done, or has at least started in some way, which I think will probably accelerate. And I'll find it during the show, but he talked a lot about other forms of energy. So I guess like let's just start off here with giving us your like the decentralized energy kind of thesis. Like give us the bull case. Why should people care? Why is it something worth investing in? How do we really wrap our head around like, okay, with these amount of inputs, this is the predicted output? Kind of give us the thesis here.
And let's not bury the lead here. You guys announced DayFi, which I believe is going to be your answer to this question. So let's talk about DayFi, and let's talk about how you guys are turning the electricity industry into an investable asset class.
Amazing. Yeah, well, it's great to be here, guys. I appreciate the time. If we take a step back, energy is the constraining factor to the next, decade plus of progress. Everything from AI and compute, but Andy, you hit it right. Reshoring of industrialization, deglobalization, like the fragmenting of supply chains, leads to an incredible increase in electricity demand. Autonomous vehicles, electric vehicle fleets. If we want to see Waymo grow, we want to see better products than what exists on the market grow. That depends on more electricity delivered when the market needs it. Robotics, all of this demands massive increases in electricity. And so we're in this world where for the last 20 years, electricity demand growth in the US was basically flat. And over the next 10 years, peak demand is set to almost double. And we need to find a way to solve this problem. The problem is centralized generation really isn't the solution. It's simply too slow. It takes too long and it's too expensive to build all the new transmission infrastructure, all the interconnection process, all of the surrounding infrastructure in order to build a massive power plant in the middle of the desert, connect it into the grid, and pipe that electricity in. Simply too slow and expensive. Quick data point I'll give on this. Traditionally, every power plant goes through something called the interconnection queue. 10 years ago, that queue took 2 years to review and approve. Today, it takes longer than 5. So before you can even start construction on a new power plant, we're talking about a 5-year wait time. Distributed energy is the cheapest and fastest path to scaling new energy capacity on power grids, without a doubt. You totally circumvent this process. You circumvent the need to connect it in with new transmission and distribution infrastructure. You can deploy it in a matter of weeks on power grids, and you can use it to scale energy.
Yeah, let's get Jason reloaded because he was going on a rant. I think obviously energy is the way to go.
Dude, I've got the part of the passage of the book up.
Oh yeah. Okay, so why don't you read the passage here?
Yeah, it's short. I'll give us like the TLDR here. So, basically we just you're back now.
Yeah, we got you back.
We'll get you up in just a sec. Leo, just bring him up. We've long known that sunlight can be turned into electricity, but the challenge has been a way to capture that energy, somehow convert it into a usable electricity in a cost-effective manner. Obviously, we're in the sunshine state. We don't really have that problem. And Jason, we'll bring you up ASAP. We're just gonna make sure that you're all set. I think we just dropped you for a sec. Basically, we had all these advancements in technology for solar. As recently as 2010, if I had told you that solar would emerge as a major factor in global energy production, you'd have laughed and said something as if, dude. Everyone knows that solar panels are too expensive, too inefficient, and useless on cloudy days. But one modern advancement in technology leads to the next. And here we've got Jason back up on the screen. And basically, by the end of 2019, the total gigawatt power increase from 2000 to 2019 was an 81x, enough to power 15 million homes in that 20-year period. That was 6 years ago. That number is posed to soar another, I don't know, a couple hundred or a couple tens of X's probably by the end of 2030. And yeah, we'll get into some more of it. But Jason, you're going on a huge rant, so please continue.
Yeah, where'd you lose me, Andy?
Man, I just went on a rant too.
Let me
so
just.
I've kind of lost it.
Yeah, that's great. Let me summarize it. Right, centralized development of energy is simply too slow. Distributed energy is a huge time and cost arbitrage on building new energy capacity for power grids. It can deploy in weeks rather than years. Doesn't go through the interconnection process. You don't have to build all the transmission infrastructure around it, and it can provide immediate savings and reliability to whoever hosts it at the same time as creating new energy capacity for power grids. And so that's why we think distributed energy is the answer to how do you scale energy production double, tenfold over the next 100 years. It's all about distributing, decentralizing, and scaling energy everywhere we can. And so Daylight is focused on building capital markets for distributed energy to make this as robust of an asset class as possible, because it is the most critical new energy source we have to scale on power grids today. And so DayFi, to your point, Robbie, is kind of the introduction of the DeFi side of Daylight, where we're building this globally available yield coin product tied to revenues from distributed energy projects that makes electricity yields available on chain, liquid, composable, and is a totally uncorrelated new asset class for DeFi.
Jason, I keep hearing you say decentralized energy, right? And so is Daylight inherently is it only for solar, or is the core product here the financial layer on top of decentralized energy? And this is applicable across liquid natural gas, across nuclear, across all sorts of other renewables beyond solar.
We're focused on distributed solar and storage today. So batteries and solar, fuel and storage is the kind of critical layer that we're looking to incentivize and build at Daylight. Because again, what we're looking to solve is bottlenecks on power grids by distributing energy across the power grid. Daylight uniquely is not just a financing layer, right? One of the right ways to think about Daylight is as a decentralized electric utility. So we have the incentive layer that will incentivize hosts and users to come to the platform and deploy energy capacity on the network. There's the network layer that aggregates all the data and forecasts and verifies and measures everything that's being provided into the network from this kind of decentralized group of hosts. And then you have the capital markets layer that is financing the infrastructure and making it available and easily deployed in a way that removes a lot of financial barriers to entry. And all of these pieces come together in one verticalized network that allows the protocol to scale effectively as quickly as possible.
One thing about solar is, so I bought a house like a couple years back. We ripped the solar panels off. It was a piece of crap roof. I had to get rid of them. And what was really annoying was actually you had to have this company come out and take the panels off, and they would have to store them, and then they'd have to resell the panels to somebody else. And there's this whole freaking physical problem with panels. It's like why Bitcoin's great, because you just throw it on a ledger, you bury it, and you're good. With solar panels, there's like this storage issue that I think is being solved, but I think that would cause some obstacles and some issues for you guys. How do you guys think about this storage issue with solar? And am I over exaggerating this? How do you think about this?
Are you talking about physical storage of the panels themselves?
Yeah, I think both actually. I think but I'm not that educated here, so I'm just trying to sound like I know what I'm talking about based on my boy Marin here. That I can read you the passage, but I was trying to let you rip it here.
Yeah, anything you do in the physical world is clunkier than the world of bits, and that's the nature of building physical products. But also, physical products and physical networks are the most important ones and critical ones to build today. And so, managing that complexity is something that we have teams that do. That there are other companies, distributors, logistics companies that focus on removing as much complexity to the physical layer of this as possible. When it comes to interacting with the network, right? There's not a bunch of panels the protocol owns in some warehouse somewhere. There are completed, commissioned, cash flowing projects on roofs that are tokenized and deployed into our capital vault that are used to kind of support the revenues of the network itself. So the network isn't even touching kind of the layer up until project commissioning. I think the more interesting point on storage is, solar is great. It produces electricity when the sun's shining, but often, in the majority of the time, solar production does not coincide with peak demand on energy grids. And so while you might be removing demand from grids by generating electricity behind the meter in the middle of the day, that's not actually when the grid needs that. And so what we do at Daylight is the majority of our installations actually come with oversized batteries as well. Number one, it's a better product for the host. They get access to backup power when the grid goes down and there's a power outage, there's a storm. That's built into their subscription. And so that's just a better product because not only are they saving energy or saving money on their energy bills, but they're also increasing their reliability and increasing their independence. But number two, the battery enables the network to aggregate its capacity through that storage layer and make it available to utilities, to power traders, to entities on the electric grid that can utilize that stored energy when the grid actually is strained. And the protocol can then monetize its power at a higher rate because prices increase when the grid is strained. And so that storage layer is like very fundamentally important to what we're doing at Daylight.
Gotcha.
It's not just about producing energy, it's about ensuring that we have the infrastructure to deliver it to the grid when the grid actually needs it.
Got you. Okay, so that issue that you've like laid out here, does DayFi then kind of provide a like financialization or like an economic layer to create a market to like enable different participants to kind of I guess like not like bet but like side and like provide the liquidity or the capital needed to spin up new. Talk to us about this USDS deposit vault that you guys have on Plasma, DayFi, just kind of like how the vault interacts and helps you with this kind of situation that you're facing here.
So what DayFi is bringing to market is what I would call, a yield coin, a liquid composable asset that generates yields from an underlying yield source. And traditionally in crypto, those yield sources have been treasuries or they've been some type of on-chain money market fund. And what we're bringing is yield that is attractive and backed by something uncorrelated to crypto markets, which is the revenues produced by all of these energy systems distributed on the network, right? So it is the subscription payment from the host. It is the grid services revenues we're getting from using the batteries to support the energy grids. It's the tax credits and government incentives that come from deploying new assets onto power grids. And all of that flows back as a new novel type of yield asset that we are building in a decentralized way for DeFi markets to utilize, to collateralize, and to build like totally composable new yield products on top of this asset. And so that's kind of the vision of what DeFi is doing. To your point, I actually do think there are interesting ways to leverage prediction markets, knowledge markets, like trading markets as you start to scale physical infrastructure. But for now, our focus is on yield. Down the road, there may be opportunities for, hey, perhaps there's a way to bring some measure of electricity trading around this network on chain as well.
Yeah. So let's sort of trace through because there's a lot of aspects to this stack, right? And we've talked about a lot so far. And so just to summarize, we've got the foundational business model of Daylight, which is selling solar power and storage of solar power to the everyday human, right? Anyone who needs electricity, and you guys have power purchase agreements. You're doing residential neighborhoods. You've got a thriving solar power business comprised of multiple aspects that is generating revenue. Then you've gone and you've built this liquidity layer on top of this power business, right? And so you've got Grid. This is the liquidity layer. Shout out to our friends over at M0. You guys are using their stablecoin infrastructure. This is the stablecoin of Grid, and it's fully backed, composable, redeemable. It's used to mint the yield coin, right, which is the second part of the liquidity layer. The yield coin is where someone can get access to the revenues that you're generating from the solar power company of Daylight, right?
That's exactly right. And then I think, the interesting way to top all this off is, to your point, Daylight is not just a RWA or lending platform. It's not just a decentralized physical infrastructure network like Helium. It is kind of the culmination of all these different pieces of the crypto stack that give us a competitive advantage over traditional models. And the entire system is decentralized end to end in like a totally unique way that brings something novel to DeFi markets, which is energy-backed yield, brings something novel to the deployment of the physical infrastructure, which is, token incentives and the ability to, build community bottom-up growth models for the deployment of infrastructure. And then having a totally, permissionless network that people can deploy capital into, can deploy infrastructure into, and can query in real time to see how the network's performing.
Perfect. And one more question about this, about DayFi, right? The liquidity layer on top of the solar power company. Framework invested in you guys. We talked to Michael and Vance quite a bit. I think they'll be on the show tomorrow. And so they've kind of brought up this idea of yield coins and how that can differ from stable coins, right? I think what I notice is missing from the mechanics of DayFi is a utility coin or a governance coin or just a generic equity token of Daylight, right? And so I'm curious, do you think this flywheel is sufficient with a stable coin and a yield coin? Or do you think that it's missing a token of sorts? And would that add anything to the overall value accrual mechanism here?
It's a great question, and I alluded to it just in that last statement, Robbie, which is I actually do think the culmination is the launch of a network token that brings all the stakeholders together: the hosts, the originators, the capital providers. If you take a step back, right, there's two things that need to be done in order to scale an energy network. You need to drive the behavioral incentives in order for people to adopt daylight and distributed energy, which is a better product, right? It's cheaper, more reliable power, but it's still a complicated product. It's an education-driven sale. How do you get them to pay attention? How do you build a community cult army to go out and scale this in the real world in a really high leverage and efficient way? And then how do you catalyze a huge amount of capital on the back end in order to finance this? We think crypto is powerful and very good at doing both of those. And so when Daylight started, it was much more focused on kind of the pure Helium deepen style, token incentive driven marketplace for driving new deployments of physical infrastructure. And what became very evident to us is that doesn't make sense without the capital layer. And so as we're starting to scale the capital layer, I think the right way to think about it is how does Daylight create a advantage in the market, not only on the capital side, but also on the origination side. And deepens give us a really unique playbook to go model ourselves off of, improve off of, frankly, and deliver kind of a net new product that closes the entire value loop for the network.
And Jason, I would say that the Helium style tokenomics of traditional deepen, for lack of a better term, are cooked. They're cooked. They're zero.
You will not hear me argue with that.
I'll look at the HNT chart and honestly, they're doing incredible work, but that is a terrible looking chart. And look, I mean, so
I think that's exactly the point, right? Is that their primary business is disconnected from their capital layer.
Correct. And Jason just explained kind of how you think about this, but could you maybe just go a little bit deeper? Like if there is a Daylight token, how will you make sure that it's not cooked?
It's a great question. I think if we take a step back and look at deepens, to your point, Helium really is cooking now, and I think their flywheel is starting to close. Like the flywheel is now closed, and I, not financial advice, but I think what they're doing is incredibly exciting today. But it's taken years and years and years to get to this point. Similarly, we're starting to see other interesting deepens start to hit some level of trajectory and escape velocity. But I think one of the early flaws of many deepens, and this is actually just endemic to the model itself, is that the idea was we can print money to build a network that then can go do something functionally useful and valuable. The cool thing about Daylight is that we have both individual value to the hosts, which is cheaper, more reliable energy. We also have network value, which is aggregating all these assets and making them available to power grids to support power grids. And so there's value in the product in and of itself before someone even thinks about a token. So you're no longer required to just give this perpetual inflation stream for someone to keep a box online. The reason for someone to keep the box online is because the box gives you more reliable and more affordable energy.
Totally.
And the tokens are the customer acquisition wedge, the thoughtful way that we can give people, number one, ownership of the network they're building and upside in the network they're building. But number two, get them in a process that is again, complicated and education-driven sales process, deeper into the model. You can build unaffiliated community armies going into their local markets to help deploy and scale this. You can take the best part of Deepen and apply it to a network that generates more and more revenue with every single node that comes online into its platform.
Yeah.
And so I think that is the fundamental difference is you can design a token model that can be more calculated in how it distributes itself. You can also build a network that generates revenue much earlier in its life cycle than what maybe a traditional Deepen does.
Revenue meta strikes again, Rob. Jason, I would say that that's spot on because it's like when I heard about helium, when I heard about these, deep in, projects, it was like, all right, we're gonna evade the traditional issues that Comcast has or that other physical infrastructure networks have, because we can just launch a token and then we can just print, $500 million FTV out of thin air, and then we can just use this to like basically incentivize, cheaper usage or, whatever it is. And it was like, okay, well, yeah, great, but like, how long is this going to be able to last, or what is the actual value of this token? And so, sometimes being an entrepreneur and being a founder, it's actually nice to be in the let's call it the second cohort of idea establishment here, because I think it's very clear that from your strategic perspective, obviously you've thought this through very, very deeply and are quite bright, but you have to do it in this more sophisticated, smarter way, and I think that's bullish.
Well, if you aren't, paying attention to the market and taking market feedback, then like you aren't building correctly as an entrepreneur. Like you should be always reevaluating your priors, strong opinions, loosely held, all of that. And I do think from the deep end, kind of 1.0, there will still be massive businesses built. I think Helium is going to be a massive business. It already is a large business. I think Hive Mappers seems like it's building a massive business. And so, what you want to do is just study what worked, what didn't work. How can we take what worked and apply it to our model? I do think there's a bit of like a pendulum on crypto Twitter that swung maybe even too far to the like tokens are interesting, where it's like tokens should 100% be unlocked, the entire token supply. It should never be used for incentives. It should literally just be equity on chain that we
100%. Yeah,
and I think that loses a lot of the interesting elements of what tokens can be used for if they're used thoughtfully and programmatically and built into the value of the network itself. And so there's a sweet spot that someone's going to hit. I would say that I think we're, thinking very critically about it. It's like, how do you use a token and its superpowers in a way that also ensures that like the value is captured within the network and is very like value aligned with all the work that all the stakeholders are doing.
Coming back to DayFi, you guys are building now with Sky in the Sky ecosystem. What can people expect following the launch on December 16th? What can people expect materialistically to change? How should people think about interacting with Daylight? Just give us a kind of sense of the tangibles here following this launch.
Yeah, the 16th is really quite simple, right? So we're launching a pre-deposit vault curated by our friends at K3 Capital, built on Upshift's infrastructure. It will accept USDS and USDT stablecoins into the vault, and it will earn, yield on plasma, where that capital will be deposited through kind of DeFi yield products that K3 is curating, Aave, Euler. It will earn incentives from the plasma team in the form of XPL, and will earn enhanced points in our incentive campaign called the Grid Games, as being like the earliest capital into the protocol. So for a few weeks, that capital will just be there effectively earning yield and earning incentives before becoming the first capital into the DayFi protocol when it launches. And that allows us to utilize that vault as a way to bootstrap ecosystem liquidity with K3 across, DEXs, lending markets, Pendle markets. How can you come out the gate and build really robust integrations with the best DeFi protocols so that people have something to do with the protocol when it launches? So the pre-deposit is really the initial entry point for people that are able to participate to come into the protocol and start to benefit from it.
Many people are requesting per user deposit limits. They want the chat is saying chat is wondering if there's if there's a minimum or maximum deposit criteria.
We do not have a minimum criteria set. We also do not have a maximum criteria set. So I think we will kind of assess as we get closer if it feels necessary. I do think, like anything in crypto, right? There's it's pretty easy to sybil things like max allocations. You can easily spread your liquidity across multiple wallets and deposit it. And so we're going to do our best, I think, to make this as fair of an opening as possible. We don't have any kind of side agreements. It's just open to everyone at the exact same time, and participants that are able to participate in that first cap will be our earliest participants.
Jason, have you had, and I think you probably have, what are the perspectives or the sentiment from outside of the crypto industry about this particular model? Like, when you go into the typical, like, more traditional energy space and, you're talking with other solar companies or nuclear companies, and you're explaining what you're doing with this capital liquidity layer on top of the electricity company, are they interested in it? Do they think it's going to work, or do they take some convincing?
I think, it depends on the audience. Certainly everybody that's not paying attention to the space, takes some convincing. But I also think they're like very pragmatic. And the story is, if they have capital to finance projects, then we want to be integrated with the capital layer. And that's kind of how they think about it. I think you brought this up earlier, Robbie. We discussed this earlier last time I was on the show. We raised this initial capital off chain where it's kind of our own vehicle to bootstrap origination channel. That allows us to build out our origination pipeline and enables to build out our fintech platform for local solar companies to integrate with without having to worry about managing the complexities of DeFi. And then as we start to scale into the DeFi markets, again, that's all abstracted to them, and just Daylight exists as a financial services company that is financing distributed energy projects that they're bringing to the network. So I think it's largely pragmatic.
Another question here. We got are deposits on ETH mainnet confirmed? Question mark.
Yes, the deposits will be on mainnet, accepting USDS and USDT.
That one was from Majesty Van. It sounds like Vance's alt account or something.
Dude, these guys are running a full cabal here. It's like Sky, Plasma, Daylight. This is gnarly, man. Jason, I'd like to just end this off for the last couple minutes, just more holistically thinking about this decentralized energy thesis. So I'd say a lot of people in blockchain and crypto investing, if you've been around for a while, you kind of naturally adapt this, the debasement trade thesis. The denominator is worthless. The dollar fiat devaluation thesis. The scarce asset thesis. However you want to say it. And like obviously, Bitcoin's programmatically scarce. You've got other crypto assets that have similar properties. You can expand that outside. Then you've got gold and silver. They're on an insane run right now. Also, not as programmatically scarce, but scarce by physical nature. Then you've got real estate, land, energy, oil, etc., commodities. So it's kind of like this basket of investable assets that are just scarce by design. And then because of the inflationary regime that we've been in for such a long time and that we will likely continue to be in, this makes it appealing for an investor who can just understand basic supply and demand. When you're looking at mapping this over 5 to 10 years, crypto people like myself, we expect a 5x in 5 years. Now, I know that's not exactly what's going to happen, right? But like, if your portfolio didn't like 10x for the last 8 years in crypto, I'm sorry. And so when we're looking at the actual investable energy market here, let's say to 2030 to 2035, what are the key factors that investors should look for and pay attention to? And then if you could just like give us a rough like forecast or just what your vision is for how this market evolves and then how you kind of want to entrench yourself in that, I'd appreciate kind of like this broader view.
Yeah, maybe I'll just say that this and everything else I've said is certainly not financial advice. But I do think, to your point, right, baskets of things that you can't print more of are always attractive in fiat denominated markets. Energy is no different than gold in that standpoint. But there's something else going on here, which is like the structural shortage of electricity that is able to be delivered to markets to supply compute growth, to supply electric vehicle growth, supply electrified heating growth, reshoring of industrial capacity, all these things we've talked about. And so the trade for Daylight really is a network that goes long power, right? We're going long power and we're developing distributed power plants that aggregate themselves into larger power plants through software that can deliver electricity to grids at scale. And it can do it in the fastest and cheapest way possible. We're seeing really interesting things happen in the world of like private equity and infrastructure funds, right? Blackstone, KKR, they're all buying large scale power plants because they are trying to express this view of how do we go long electricity. The last year, I actually just saw this yesterday, which was super interesting, but the EIA just published data on residential retail electricity rates. Retail electricity rates for the US, across the US average, this is not the top quartile, this is average, increased 7.5% from 2024 to 2025, significantly above inflation. And that, again, is this constraint that we have as a society of we need to go long power. We need to do it in a way that is fast and efficient and can get more kilowatt hours onto the grid in a way that doesn't require all this necessary transmission and distribution infrastructure upgrades, which make things even more expensive. And so what is my prediction? I think that being in the business of building power plants is going to be a great business for us. I think that building and scaling energy capacity faster and cheaper than other centralized developers can do it is a competitive advantage. And I think that the world in 10 years will look, from an energy production standpoint, much more decentralized by requirement physically decentralized than it does today. And Daylight hopefully will be one of the major players, if not the major player, that's driving that kind of fundamental shift in how power grids function.
And so if we think about like Uber, right, or like some of these other kind of P2P applications that have really grown in size over the last 10, 20 years, is it a similar thesis as to why like ride sharing has done well, as to why decentralized energy is going to do well, or is it different? Like, is it like, is it a fair analogy?
I would argue it's different. I would argue it's different. And the reason Uber and decentralized ride sharing took off is because it's simply a better product for the end user. Decentralized energy is it offers things twofold. It's a better product for the end user, the person who's deploying it. They get cheaper, more reliable power. So that's valuable. But it's also, again, this structural advantage compared to other deployment models for the grid. If you don't deploy distributed energy, prices will continue to spiral out of control. They'll continue to print at 7.5%, 10% annual inflation. And that would be, I think, pretty problematic for power grids. So there wasn't like this like external like taxis disappeared overnight and Uber had to come fill the gap, which is what Daylight finds itself in the position of. We literally can't build enough power, and all the companies that are out there attempting to scale energy capacity in new ways are going to benefit from this structural trend. I think the analogy would be like if taxi companies were made illegal overnight and went away, and all of a sudden there was nobody to drive anybody around, and then Uber came into the market.
Got it. Holy crap, man. I need a bag of Daylight. Jason, thanks for your time, man. I appreciate it.
Awesome. Thanks, guys.
It's been awesome.
Thanks, Jason. We'll see you next time, man.
Appreciate
Congrats on all the success.
All right, buddy.
Thank you.
Bye.
See you soon. Bye.